Hey everybody, Boris. Welcome to the weekly technicals for Euro dollar, dollar yen, and pound dollar, the majors from May 15th through May 19th of 2017. And the big question next week, I think, is whether the dollar is ready to drop. There are signs, both technically and fundamentally, that we're starting to wobble into the end of the week, and I think the dollar may be setting itself up for a little bit of a correction. The calendar next week is actually very, very sparse. We literally don't have anything of value in Europe, nothing much in the US. The only data set that we have is really out of UK, and that could be actually important. The UK data, we have CPI and retail sales. This week, the Bank of England was considerably more dovish than everybody thought they would be, dismissing any kind of inflationary peaks in the price levels and really focusing much more on the decline in demand. So it'll be interesting to see if the decline in demand continues, if retail sales continue to be depressed to the downside, and whether the earnings are still going to be growing at a very, very slow pace. The big problem within the UK right now is that the actual real earnings is turning negative. The inflation is beyond what earnings are growing at, and that's creating actually a negative result and therefore depressing retail sales. So this whole dynamic of depressed retail sales, higher inflation, lower earnings, be interesting to see if we have a continuation, because that's a big disparity on the consumer side versus what's happening on the business side, where there's actually quite a lot of strong demand. And that could in some ways really impact which way cable resolves. But to me, the most interesting story of this week is actually dollar yen, because what happened, and actually let me go back to last week to sort of show you on the US side. The most important to the US side today, this is Friday, was this very tepid core retail sales and a relatively tepid CPI. But the much more important point is the retail sales. Now, the retail sales were up, they were positive, but they were smaller than what everybody expected. And this seems to be a recurring theme in the US, and that may, in fact, really depress the speculation that the Fed is going to do 3 more rate hikes as we complete 2017. It's much more likely now that they may actually opt for 2 rate hikes and pause in September. In which case, as you can see, dollar yen, therefore, which has had this massive one-way rally for the last 2 weeks of about 600 points, from 108 to 114, could be coming to at least a near-term end. You can certainly see this on the technical side. Let me actually zoom in a little bit. You can see this. You can see the 114 was a pretty significant zone of resistance for us this whole week. And even on positive news on Thursday, which was hot PPI numbers, we couldn't get ourselves up above this level. At this point, it's pretty clear that the 114-115 corridor is a big resist area. It's basically a quadruple top area. But we haven't been able to actually even clear it to kind of test the 114. And as a matter of fact, it looks to be, although the decline today was relatively modest, it looks to be as though the bulls really want to test the much lower end of the range here towards the 113s and 112.50s. Overall, technically, you can still see the dollar yen is failing at the highs. It's still on this was a recovery rally from the lows set in early April, but the recovery rally has run out of gas below the prior highs, and that suggests there may be more of a corrective move here, at least towards the 110s as we go forward. Generally, sort of on a longer term basis, until dollar yen clears 115, you can't make a confident prediction this has been a bottoming out process and that we're back on track as far as the rally goes. So far, it looks to be yet another failed rally with potentially move to the downside. Certainly in the near term, the downside pressure, I think, is pretty significant. On the flip side, this is where you start to see dollar weakness in some ways more pronounced than just in the yen. The euro held the 108.50 really support. And that's very important because what we're seeing here is a runaway gap that has not been filled. This is the runaway gap since the Macron election. And the gap has not been filled yet. The longer the gap goes unfilled, the stronger the potential here for further rally. And it certainly feels like the euro is once again ready to move towards the 110 level. Now, we don't have quite the volatility candle signature that I talked about, which is sort of a big breakout candle. But we did end on the highs of the day today. It does look positive, and it certainly seems like euro may be targeting the round of the 110 once again. So given the structure here, you can see the dollar starting to strengthen, dollar starting to weaken, both against the euro and against the yen. The one exception to this rule in the majors here is the pound, which is clearly having a relative weakness trade here and starting to really die out in front of the 130. And the 130 level is extraordinarily important. I think I have to go to the weekly charts. Let me go to the weekly charts here to show. You can see this was the support level pre the algo crash, and now we're having a very, very hard time recovering it. So in many ways, a lot of the UK data this week is going to be make or break on the pound and determine whether we can make the run through the 130 or whether this is going to be a failure again at the 130, in which case the move back down really takes us towards 128 and perhaps even all the way, if we start breaking this support over here at 127.50, it basically creates a massive decline to the downside. So overall, we're looking at the, when we look at the levels here, the levels this week as we start, support at 108, resistance at the 110, those are the key levels, the 110 especially as far as the Euro bulls go, going to be a very key level to target. With dollar yen, it's still on a broader sense basis, 115 to the upside, but a downside now, the true support comes in at 1200, and the near-term support certainly looks to be at the 1300. So we'll see how that's happening. And with pound, it's that 200-point range, this key. So far, we're holding the 28s, but if 28s are given, we could move all the way back down to 2650s. And certainly the 30 level, which is the very, very key resistance level, is going to need some very positive catalyst to move us through. If we do recapture the 30 level, then that turns the pound structure much more bullish than it currently is. For now, it's the relative weakness story amongst the three pairs. So that's how the week shapes up for the majors. It's really going to be a battle for these very, very key levels as the news is generally minor as we start the week.